Welcome back, YouTube. We are retouching back on some of the plays that I had referred to last time that I had warned you about. One of those being Riot. Now, of course, this was obviously before the past couple of days where basically Riot fell out of bed. The reason being is because, as you can see, just in the span of what, 3-4 trading days, and the stock came down all the way as far as 40%. For those who ended up getting squeezed out of this play because maybe you had a margin call or whatever, this is, of course, or you had to add more money, maybe you got spooked and sold. This is why I typically stay away from these plays. The other one that I spoke about was, of course, Fuel Cell. And like I had said, I think I saw it right here. I had talked about it right here. I think this was the day that I got out. Actually, excuse me, it was on this day. I had gotten out on this day, held it. And I had said in my next video that more than likely what would happen was that the stock would retest 23. But like I said, if the market had a weak day, that this stock was going to collapse. I'll post a video where I said that. And that's exactly what happened, where we came all the way down to the $14 resistance. So from where I had warned people about getting into this play, the stock basically, as you can see, fell an additional 31%, right? And so from where the stock was to coming all the way down here, the stock lost 51% of its valuation. And that's why I tell you, be careful about which plays you get into. There's a lot of people that are promoting a lot of these pump and dump stocks. And the easiest way to tell is to just look at the chart. And if the chart looks like this, then you want to be careful, because it's literally just musical chairs. Once the music stops, you never know if you're going to be the one left holding the bag and watching your position pull back, 40, 50% or more. Another one of these plays, of course, is, for example, like IDEX, Ideonomics. This is another pump and dump play. And as you can see, where the stock basically hits a peak of 550 and gets a pullback of 45%, right? Now, if you actually look back at the play, if you actually look back at the stock, you should just looking at the stock be able to tell automatically what kind of situation you're in. And just looking back, we can just draw a nice straight line. It should not be too difficult to understand why the stock pulled back, right? Because you came up to an area where the stock basically makes lower highs whenever it does hit these peaks. Because typically, as you can see, it started from a lower vantage point, whereas previously where the stock took off from, it took off from a higher vantage point, which is why I was able to get here, right? But the stock came down from here. It was a penny stock. It was 28 cents. Think about that. As if you're following someone that's telling you to get into these plays, you have to ask yourself, what, these stocks are valued as pennies because that's what the companies are worth. The companies are worth pennies on the dollar. And then when you see a valuation, I shouldn't even say a valuation, when you see the price tag of a stock go from 28 cents and you see that price tag shoot up almost 2,000%, you have to think, I want to know what technology, because this is a technology service, information technology service company. So I want to know, if you think that this is so great, what's the service, right? What's the service that they're offering? What's the good, right? Because economies are only two things. They're goods and they're services. Either you're providing a service like me, I provide a service as a nurse, or you provide a good, right? I sell you a cell phone. And that's basically what all economies are. They're just goods and services. And so when you're investing in a company, that's what you want to know. I want to know, is this company offering a good, or is this company offering a service? And what is that good and what is that service in comparison to what exists in the market? Or is it a brand new service that they want the market to consider as having value? And that's for me as an individual to be far thinking, to say, okay, I think this is going to be a great service, but people really haven't caught on. And so 5, 10, 15 years from now, this stock is going to blow up. Or I think that what they're offering in terms of their good is very valuable. And once people start to catch on, this is going to be a good that is going to be utilized by many individuals, which is going to cause the company to grow, to expand, and to increase its revenue. And of course, that will be reflected in your quarterly earnings. You'll be able to see the company basically beat earnings or continue to grow both in revenue and of course in earnings per share. And so this is what you consider when you get into these plays. Otherwise, it's just a pump and dump, and then it's just about liquidity. That's all that it is. It's wherever you get into the play is basically if you're the last man standing, if you're up here and you're like, hold the line, right? This is what's going to be you. You're going to be here at 550. You're going to be buying it up, and then you're going to see your position collapse 51%. And then whoever it is that you're following, you're going to be like, what the hell is up with this stock? It just fell 50%. Why is that? But you don't know why, because you're just following a YouTuber or you're following whoever is your favorite influencer. And then as a result, you get left holding the bag. And since they can't tell you hold because of X, Y, and Z, I want you to hold this stock because the product that they do is amazing. Buy the dip and explain to people, this is what it is. This is why we're holding. We're holding this because of this good, or we're holding this because of this service. Otherwise, the only reason that you're holding a stock is because of liquidity, right? The only reason that the stock will go up or down is because of momentum, right? There's people buying it, people just like Bitcoin. There's nothing about Bitcoin that you can point to Bitcoin and say their next earnings is going to be great, or this news is going to be great for Bitcoin, right? It's all liquidity. That's all that it is. It's when another big company like Elon Musk tweets about it, what happens? Bitcoin goes up. When Elon Musk said that Bitcoin was overvalued, Bitcoin went down. Same thing, for example, with Tesla. Tesla is when he did the exact same thing. He said Tesla's overvalued, it fell. He said, and of course, basically squeeze the people who were shorting his company. But for high value stocks, they don't get that easily manipulated because they're not just about liquidity. They're not just about liquidity. And that's what happens in plays like this, like Fuel Cell, for example. Like I said, with Fuel Cell, with companies like Zon, right? Where you can be here and then the stock loses 53% of its value, right? With that said, let's jump more importantly into some of the other plays that I talked about. And this is just particularly the people who get caught in these type of plays are typically new investors. And when the bull market is running, everything goes up. But the moment the market pivots, these stocks fall out of bed and they start losing huge amounts of stock value because their underlying worth is not there, right? So let's go back to JetBlue. This was one that I had talked about last time, right? So as you can see, like I said, look at JetBlue, almost hitting that $20 mark. And for this video, or the remaining portion of the video, we're emphasizing the importance of understanding support and resistances. And so looking at this graph, you can see, and I was looking to sell JetBlue out at 20. I've got, still have another 85 shares in my Webull account, right? I trade via Webull. And then of course I still have my M1 account. I have both my long-term as well as my retirement, my mini retirement. And then I of course have another mini retirement here. As you can see, we did well on the day in this account as well. You can see so far where I'm up on my M1 finance. So back to the stock. So looking at the stock, and this is why it's important when you follow someone, you have to know where to get in and where to get out, and which is typically why I just tell people in advance, where's your support and where is your resistance. And so as you can see, looking at this stock, for the most part, I had said numerous times way back here that 16 for JetBlue was a huge area of resistance. And so once JetBlue broke 16, it was going to rip up into the 20s. And that's basically, we fell just shy of the $20 mark by 12 cents. The reason being is because, as you can see right here, right, this is $20. And so when you're watching the stock intraday, an airline, JetBlue was not the only one. As you can see, American Airlines also, right, straight up in the air. But if you notice the difference, American Airlines didn't sell off. Is American Airlines a better company than JetBlue? Of course not. They've been forced into laying off tens of thousands of their employees because they have no money. You can also take a look at the stock, and you can also see from February of 2018 that the stock was literally sliding and selling off, indicating to you as an investor that the company was weak financially to begin with, which is why the investors are saying you're not worth $50, you're not worth $45, you're not worth $32, you're not worth $25. It just keeps on getting sold off. sold off, because the company, in terms of its value, is not worth the price tag that the market is indicating, right? The market is indicating 25, and they're like, you're not worth it. Now, of course, we're seeing a huge injection of money into the economy, and so now we're seeing an overvaluation in stocks, and so you start to see a shift from tech into, because of the pandemic, into companies like American Airlines, many of these companies that have been beaten down. And so American Airlines didn't sell off because there was no real resistance for American Airlines at the price that it was. But of course, for JetBlue was coming up onto a multi-year price point back in 2018, 19, and even in 20. JetBlue had a hard time breaking that $20 mark. And then finally, we see a little bit of a breakout right here. Let's look at this. Of course, this is prior to the collapse from the pandemic, but you can see prior to it, it basically, what became an area of resistance, $20, now became an area of support, right? As you can see, now you see the stock basically channeling. We finally got a breakout, right? A secondary breakout right here, a retest, a retest, a retest, a retest, multiple days, a retest, the stock wanting to trade higher because buyers were basically stepping in. And then of course, the sell-off came from the pandemic. So we could see JetBlue sell higher than 20. We really could, because that was the direction that the company was already going. Not so much with American Airlines, but that is an indicator for you if you're looking and you're thinking, well, where am I going to get out? Or where, more importantly, where will I meet resistance? And so you might be looking at the stock, because JetBlue basically sold off. Let's look at it on the 5-minute. Right, JetBlue sold off from about 12. At about 12 o'clock, where was the market, right? The market went up from 8. It went up like another 200 and something points. But JetBlue sold off, and you're looking at, and you're watching the market, and you're like, the market is ripping. Why is JetBlue selling off? That's why, because it hit a resistance point. It hit a resistance point in the chart, and as a result of hitting that resistance point, people were naturally starting to take profits, because they know, looking at the chart, just like I am, where people more likely going to start to piece out of their position. And so as a result, the stock starts to sell off. Then people who are shorting the stock come in, and as a result, the stock starts to fall. That doesn't mean that JetBlue isn't going to hit 20 or go above. It just means that we see a temporary pullback, which I'm perfectly fine with. So we're basically going to be looking at JetBlue in terms of the actual portfolio. There was another thing that I did want to point out. You can see how we're doing on the day. We had a phenomenal day, up 1,500 for the day. That's basically been the gist, right? It's only Tuesday. As you can see, we are for the week up 1,800, and then for the month, having an amazing month so far, up 5,000. And this was the other thing that I wanted to touch on, was in terms of my entire portfolio, it took me almost a year, I would say, to hit the 10,000 mark. It was actually a little longer than a year, because I remember I posted this video back on January 14th, and I said my portfolio finally hit plus 10,000, right? And we're already just 1 month. We're 1 month in, and we're already up, right? We're already up another 5,800. And that's just within 1 month after me posting that video, which indicates to me that we're seeing a huge movement into dividends and to basically recovery. A lot of these stocks that have not yet recovered, so people are looking for value in stocks like dividends. And so, like I said before in my last video, that I'm going to be moving a little bit more money into food stocks, because I do perceive that we are going to have some increase in prices in terms of food. So I'll be looking at things like FOLO, General Mills, Coca-Cola, Kellogg, etc. Those, and Tyson. Those will basically be my 5 plays, where I'm probably going to put between about 10 and 15,000 into those plays, and we'll have to see how that works out moving forward. But that's going to be it for this video. If you like the content, please of course hit the like button, subscribe so that you don't miss out on future content, and I'll check you out next time. Thanks for watching. God bless.